Hello there and welcome. If you're a new parent here in the UK, then this guide is absolutely for you. We're going to break down, step by step, exactly how to apply for child benefit in 2026. So let's get right into it. First things first, a massive congratulations if you've recently welcomed a new baby into your life. Now, let me ask you a really important question. Could you be accidentally leaving over £1,300 a year just sitting on the table? That's a lot of money that could be making a real difference for your family. To make sure you're getting the absolute clearest, most up-to-date information, we've teamed up with the experts over at My Tax Accountant. They've put together this entire guide to make the whole process as simple and stress-free as possible for you. So, here's a quick look at what we're going to cover. We'll start with why it's so important for everyone to claim. Then we'll go through a pre-application checklist, the step-by-step application itself, what happens for higher earners, and finally, what to expect after you've applied. Right, let's kick things off with the most important part, why you really should claim child's benefit. And trust me, it's about so much more than just the weekly payments. There's a huge hidden benefit here that so many people completely miss. Okay, so let's talk money. For the 2025 to 2026 tax year, you get £26.05 a week for your eldest or only child. That adds up to a very handy £1,354.60 over the year. And for any other children, it's an extra £17.25 per week. But this is where it gets really important. You see, there are two massive benefits. Of course, you've got the cash itself, which helps with all the costs of raising a child, but then there's the secret weapon, national insurance credits. If you or your partner takes time off work or earns below a certain amount, claiming child benefit protects your future state pension. It's absolutely vital. This really sums it up perfectly. Think of it this way. Claiming is an investment in your future. Even if you earn too much to actually keep the money, which we'll get to in a minute, you're still banking those crucial credits for your retirement. Okay, so now you know why it's a must-do. Let's get practical. A little bit of prep right now is going to save you a ton of hassle later on. Let's get everything you need together. So, here's your quick checklist. You'll need your child's birth or adoption certificate, your national insurance number, and your partner's too if you have one, and of course the bank details for where you want the money to go. Just having these bits and pieces ready will make everything so much faster. And listen up, because here's a pro tip you do not want to miss. Don't wait for the physical birth certificate to arrive in the post. You can, and you absolutely should, start your claim as soon as your baby is born and registered. Why? Because the payments can only be backdated for a maximum of 3 months. If you wait any longer, you will literally lose out on money. All right, you're all prepped and ready to go. Now we're diving into the main event, the application itself. Don't worry, we're going to break it down so you know exactly what to do. Honestly, the whole thing really boils down to 4 simple steps. First, pick how you're going to apply. Online or the app is definitely fastest. Second, grab all those bits from your checklist. Third, just fill in the details for you, your partner, and your little one. And finally, hit that submit button or pop the form in the post. It's designed to be pretty straightforward. So let's just quickly look at that ideal timeline again. As soon as the birth is registered, the clock really starts ticking. You can make your claim just 48 hours later. And please remember that golden rule. Get that application in within 3 months to make sure you get every single penny you're entitled to right from day one. So, the big question. How long will you be waiting for that first payment? Well, officially, if you apply online, it could be as quick as 3 days. In the real world, it's usually more like 1 to 4 weeks. But compare that to applying by post. The official estimate is up to 6 weeks, but we know it can sometimes drag on for over 3 months. The message here is crystal clear. Go digital if you possibly can.
Okay, now stay with me because this next part is where most people get tripped up, especially if you're a freelancer, say like Chloe from Manchester, whose income can go up and down. We're talking about the high-income child benefit charge. It sounds complicated, but I promise we'll make it simple.
This is the key question. If either you or your partner has something called an adjusted net income of more than £60,000 a year, then you need to listen closely. If you're both under that, you can relax. You get to keep all of the benefit, no problem. So what on earth is adjusted net income? Well, it's not just your salary. It's your total taxable income from all sources after you've taken away certain things, like your pension contributions. For example, if you earn $65,000 but you put $6,000 into your pension, your adjusted net income is actually $59,000. This is a brilliant tip, by the way. Upping your pension contributions can sometimes help you keep your child benefit. This chart makes it super easy to see. If the higher earner's income is below 60 grand, you keep everything. Between 60 and 80,000 pounds, you have to start paying some of it back through a tax charge. Basically, for every 200 pounds you earn over the 60,000 mark, you pay back 1% of the benefit. And once your income hits 80,000, the tax charge cancels out the benefit completely.
So here's the most important takeaway for high earners. You still have to fill in the form. You've got two clear choices. Option 1, you take the payments and the higher earner deals with the tax charge. Or option 2, you fill in the form but just tick the box to opt out of receiving payments. You won't get the cash, but, and this is the crucial bit, you will still get those vital national insurance credits with no tax fuss at all.
Fantastic. You've sent off your claim and you've navigated the high earner rules. So what now? Let's take a quick look at what happens next and how you manage your child benefit long term. Well, you'll typically get paid every 4 weeks. The payments will carry on until the end of August after your child turns 16, but you can extend that up to age 20 if they stay in approved education. And remember, it's your responsibility to tell HMRC about any big life changes, like if your income pops over that 60,000 pound threshold, you have another baby, or your relationship status changes.
So if you only take away 3 things from all this, please let it be these. 1, always, always claim, even if it's just for those precious pension credits. 2, apply as early as you can so you don't lose out on any money. And 3, go digital. Use the online service or the HMRC app for the fastest, easiest process.
Now, just a quick and important disclaimer. The information we've shared today is for general guidance and it's accurate as of January 2026. But tax rules can and often do change, so you shouldn't rely on this information alone when you're making your financial decisions. If you do have any questions or you feel like you need some professional help with your own situation, whether it's about child benefit or any other tax matter, we really do recommend you get in touch with the experts at My Tax Accountant. You can call them on 0208 570 8531, or you can drop them an email at info@mytaxaccountant.co.uk. And for more fantastic tips like these, make sure you subscribe to their YouTube channel. Thanks so much for watching.